Buongiorno, everyone. It's a pleasure to be here to be able to speak to you this morning. My particular topic is on crowdfunding, and as Gail mentioned, I've been an entrepreneur all my life. I'm not an accountant, I'm an engineer. I guess the reason I'm here is I'm on many audit boards, and I serve on many audit committees and involved with audit standards in Canada. But my background is not accounting, my background is entrepreneurship, and I've spent most of my life starting companies with other entrepreneurs. Presently, I run the innovation office at Simon Fraser University, and we have a number of incubator programs, accelerators, and it's really all about startups, encouraging young people, not necessarily young people, but generally it's young people, to start new ventures, to take those big risks. And having been in the driver's seat for many years myself, I know that it's very, very difficult to get the capital you need to fuel the growth of your venture. So over the years, I've been developing different mechanisms to source capital from different organizations. Now, those of you who went to Cinecittà last night and who went on the roller coaster, like I did, at least the smaller one, will know that entrepreneurship is like a roller coaster. It's very thrilling, but it does have its ups and downs. And certainly the capital part of that is very interesting. So what I'd like to do, just to sort of set the stage here, is I don't know how, I guess you can see that fairly well. These are the top funding sources, and this really covers North America. It's not a global slide, but what's important is to show the relative sources of funding. And over the past few years, I've personally been very, very involved with angel financing. Angel financing is really people who have been entrepreneurs, who have made some money in their own ventures and are now willing to put some of that capital to work in new ventures. That usually goes along with mentorship, hand-holding, and other support for the companies. There's been, generally speaking, funding available for entrepreneurs by institutional venture capitalists. But over the past 5 to 10 years, that has somewhat eroded, especially in North America, because the returns that venture capital organizations are getting are not that great, and so the investors in those organizations are holding back. On the other hand, there's a growing emergence of private equity, private individuals, so-called angel investors who are willing to commit resources. And at the same time, we're seeing more of the general public trying to get into the business of angel investing. So in terms of where entrepreneurs and SMEs go to raise their capital, usually they start with family, friends, and relatives, but that only goes so far. And as I mentioned, there's much less venture capital available these days. The public markets historically have been a source, especially for those companies that we might refer to as gazelles that are really leaping ahead and have excellent growth prospects. But that's a very expensive and time-consuming process, and it also means that you're now in two businesses. You're not only selling your products, but you're selling your shares, and you have to have the resources to deal with that. And then the angel investors that I mentioned are great, but they are relatively few in number. In most jurisdictions, it's somewhere around 1 to 3 or 4% of the population. So that begs the question, what about everyone else? And that's really where the crowd, the general public, enters the picture. Now, this all started a couple of years ago with President Obama in the US with the so-called Jobs Act. What's interesting about the Jobs Act, and there's a little story I'd like to share with you on this, when this bill came before the House, of course it passed very quickly and very easily, and everyone in the House voted for the Jobs Act. And that's because they thought it was about jobs and creating employment for people. In fact, it wasn't. Jobs is an acronym for Jumpstart Our Business Startups. So everyone voted for it without really realizing what they were voting for. And what has happened as a result of that is the securities regulator in the United States, the SEC, has had a major challenge in trying to implement the whole concept of crowdfunding, because the regulators, generally speaking, are obsessed with protecting the general public. They don't want widows and orphans and people who are not famously wealthy to squander their money and to be to erode their capital base. So it's a real challenge for the regulators, and to this date, equity crowdfunding still has not been fully implemented in the US, although it has been implemented in a number of other jurisdictions. But I want to pause for a moment and talk about what is crowdfunding in general. Really, what it means is obtaining money from a large number of people and generally using the internet, using a web portal. There have been many ways of raising capital from people over the decades. I remember when I was an entrepreneur working with companies in Taiwan, and I was amazed at how those entrepreneurs were supported by their communities, local business people pooling their capital, making loans or investments in startups. We see this in Africa, in places like Kenya, with the Harambee groups that pool capital and support startup initiatives. But now that the internet is available, it opens the door to a global audience. And people from anywhere in the world that have access to the internet can participate in crowdfunding. Now, generally speaking, the crowdfunding takes really 4 different dimensions. And the most popular and what has worked very, very well so far is crowdfunding for projects. And a good example of that is this watch that I'm wearing. This is a digital watch that communicates with my smartphone. I can look at it when someone sends me an email or a text message. I don't have to look at my computer or my phone. I can just look at my watch, and it's not as disruptive when I look at my watch rather than my phone. And that was a project started by an entrepreneur, and I'll give you the numbers on how that worked. Another form of crowdfunding is donations. Charities find this a very convenient way of raising funds for their worthy causes. Equity crowdfunding is when you sell shares, equity capital in your enterprise. And that's not a lot different from loans, where investors will provide loans as opposed to buying shares in a corporation. So this is the watch that I was just showing off here. So a couple of years ago, I went on the Kickstarter site, which is probably the #1 crowdfunding site globally, run out of the US, and this is strictly for projects. It's not an equity-based crowdfunding platform. So a young entrepreneur had the idea that he wanted to raise a modest $100,000 to develop this particular watch. Well, lo and behold, almost 69,000 people went online, including myself. It only cost me $100, so it wasn't a big risk. And you basically paid in advance, hoping that someday you would get the product. And luckily, I did get the product about a year later, which wasn't that bad. And, you know, $100 is something I could easily afford to lose and not lose any sleep over. But the bottom line is that the entrepreneur raised over $10 million, and that was based on an objective of 100,000. So it was a phenomenal success. And since then, I've seen many, many other entrepreneurs use this. And in my humble opinion, it's actually the best form of crowdfunding for an enterprise, because it does 2 things. It gives you the capital, which is non-dilutive to other shareholders and investors. But more importantly, it provides the entrepreneur with market validation. If people sign up for the product because they like it, that tells the entrepreneur that he's got a good idea and is worth pursuing. Now, when we talk about equity crowdfunding, selling shares in a company, this is a little bit more problematic. And in many jurisdictions, in most countries, there are strict securities regulations. Some are more regulated than others, but generally speaking, it's illegal in many jurisdictions to sell shares to someone unless you use a prospectus to disclose your business plan, or you use some form of exemption to those regulations. So this causes many challenges. Some of the exemptions, for example, that are allowed in different countries like the US, Canada, and many European countries, India falls in that category, Australia as well. So you can either sell your shares to close friends, family, people you know, that's not a problem. The theory being that you know them, they know you, and there's a trust factor involved. You can sell to rich people, and I guess the theory there is that they can afford to lose some of their capital, so they don't particularly need to be sold by using a prospectus exemption, or a prospectus rather. There's also, in some cases, a minimum level of investment that if you have a certain minimum that you put in, you don't have to comply with the regulations. And then there's an offering memorandum, which is a bit similar to a prospectus, but not as stringent. And then finally, many countries are wrestling with the so-called crowdfunding exemption. And that means coming up with special rules and regulations to allow entrepreneurs to go out to the crowd, to the general public, over the internet, to raise modest amounts of capital, typically in the hundreds of dollars or a few thousand. Here's a typical exemption. It would let an entrepreneur sell shares up to a maximum of $1,500 per investor. And often there's a limit to the company. It's usually somewhere in the low hundreds of thousands. I've not seen too many that go above $500,000 for startups. Although later stage, you can go much higher. You can probably go to the millions. In some jurisdictions, one that I'm particularly familiar with is in my home province of British Columbia. We've had for over a decade now something called the offering memorandum exemption, which is a form of crowdfunding, and that lets entrepreneurs sell any amount of shares without any limit to any number of investors. One of the challenges in going to the crowd is to come up with, and I think this is where there's a good opportunity for the accounting profession, is to come up with a streamlined form of offering document, something that easily and simply, in a straightforward way, explains the business proposition to potential investors, and of course also warns them of the imminent risks. One of the things that I've been advocating when I talk to regulators is, what we should really do is, instead of calling it a crowdfunding exemption, we should call it a gambling exemption. Because really, when you're investing in a startup, let's be honest, you are gambling. The odds are against the entrepreneur. And in fact, most startups fail. I've had the experience of being involved with over 100 different startups in the past 20 years, and I can tell you that most of those have failed. However, the one or two that do succeed carry the day, and they are enough incentive to keep that process going. And myself and many other angel investors understand this, but does the crowd understand it? So when you get a lot of people in the general public investing in enterprises, most of them are going to fail. Even investors that know what they're doing tend to have not so good track records. For example, there was a seminal study done by a researcher in Oregon at Willamette University, and he found that of sophisticated business angel investors that he interviewed, and he interviewed thousands of these investors, he found that 40% of them lost 100% of their capital. And the reason for that is because they typically only invested in 5 or 6 companies. And that just isn't enough. The numbers don't work for you. To be successful at early stage investing or angel investing, you have to be in many deals. A typical number that's put out is more than 15. Even 10 is often not enough. So this is going to be problematic, I think, for the crowd, so to speak, because there are going to be many failure stories, many horror stories about people losing their money, and that's going to be a problem and is going to put a damper on the whole business of crowdfunding. There's also the concern about fraud, and this is what the regulators are always obsessed about. They're always worried that someone is going to scam you and trick you, take your money, and run to Venezuela with it. Well, the beauty of the crowd is that it's self-policing. So let me give you an example. About a decade ago, there was a fraudster operating in one of the Canadian jurisdictions, and he scammed investors to the tune of about $10 million. And what happened is he was basically banned from trading in the capital markets as a result of his illegal, fraudulent activities. Lo and behold, about a year ago, he surfaced on Kickstarter, the platform that I mentioned earlier. And he's now using non-equity crowdfunding as a way to raise money for a new project. And again, it sounded like a bit of a flaky project, but what happened was someone who saw his project proposal said, hey, isn't that the guy who scammed people of millions of dollars a decade ago? And instantly, Twitter, Facebook, the internet lit up with people talking about how this particular individual is a bad apple and you shouldn't support his project. So he was shut down by the wisdom of the crowd. 10, 20 years ago, before the internet was what it is today, we relied on brokers and gatekeepers to perform that function for us. And it was a lot more difficult, and it was actually easier to perpetrate scams. But now with the internet, you'll get opinions from people, you'll be able to expose people that have bad track records, and that is really where the crowd is a lot more powerful than I believe the regulators realize. Some of the challenges, and I think this is also something that accountants could see as an opportunity, when you sell your shares to several thousand investors as opposed to just a handful of angel investors, the question that arises is, who owns the enterprise? When Google comes along and says, okay, we'll buy you for $30 million, who is Google really buying the company from? Who owns the enterprise? So the transfer agent function becomes very, very important, keeping track of the shareholder records and the transfers of securities. Understanding the risk is a big challenge, and I've spoken to that. It's easy to be an investor, an angel or a member of the general public, the crowd, very easy getting in, but the big challenge, and I believe this is the one singular biggest challenge with equity crowdfunding, is getting out of an investment. Very easy to write a check, but when do you cash in? You have no liquidity when you invest in a private company. So I believe that the internet portals that are going to be used for crowdfunding are going to be the new stock exchange, because they're going to have to offer a mechanism for aftermarket sales. They're going to have to create a platform for investors to trade among themselves. So early investors who want to hand off to later stage investors can do that. So not only are these platforms going to be used for raising capital, but I think they're going to be performing the transfer agent and aftermarket function for investors. I want to talk just briefly about portals, and then I'll wrap up. So the portals, I think, will be the newest stock exchanges. There are presently over 1,000 portals globally, some good, some bad, that are already looking at offering equity-based crowdfunding. And many of these portals also offer the aftermarket support for investors. And also an important function that they can fill is that of reporting the financial results, because that's one of the big weaknesses in private investing. I struggle every day to get information from my portfolio of companies, the companies that I've invested in. So being able to get this kind of information on a regular basis will be another very important offering that the portals can provide. I've listed a few popular portals here, some of the pioneers, some of the early ones, and these slides, of course, will be available to you afterwards, and I would encourage you to take a look at them. We see also in a global context, I found, and I've done a lot of research on this because I've traveled to these countries and I've met with angel investors and others operating crowdfunding platforms. And it's a global phenomenon. This isn't certainly limited to North America or Europe. I see it happening globally. Just a month ago, I was in Santiago, Chile, and South America has active, vibrant crowdfunding platforms available both on the project side and on the equity side. Africa, organizations like GOGO, Africa, Yeti, and so on are also very, very active in this space. Here are the top 15 portals in Europe, and again, I would encourage you to check those out. And with that, I'll now turn it back over to Gail, and I thank you very much for your audience, for your attention, and I hope I've been able to stimulate and challenge you with some questions, perhaps. So thank you very much.